all of us have seen the dramatic nature of what has unfolded recently in California in terms of the fires that swept through and destroyed thousands and thousands of homes and lives, honestly. Perhaps it's time we took a hard look at a lot of things in our state to prevent these things from happening here in Washington. Now, there's a lot that went on in terms of California and regulation in the insurance industry in the past several years, 20 more, I don't know. The point is that there's been some very heavily involved and regulated government issued mandates that affect the insurance industry. Am I blaming the government entirely for what has happened in California in terms of insurance? Well, I'm not going to say entirely, but you have to turn those rocks over. You have to look at what happened to them and what we can learn from it, right? And I think one thing we can learn from it is this. When you vote for an insurance commissioner, please be mindful of it isn't just checking a box. It isn't just filling in the bubble, because you have to know who that person is that you're putting in there and what their motivations are. Here in Washington State, we have just turned over to a new insurance commissioner. We had the same one for many, many years. And while in his tenure, I'm sure he did a lot of fantastic things. He also did some things that made things more difficult in our industry here in Washington. But moving forward, we have a new one in office now. She's only been in there a few weeks, so obviously I have no opinion or feedback about how she's doing now. But you can help by being involved. The Office of the Insurance Commissioner posts lots of very valuable information on their website, but also take that information and ask your agent about it. Ask the behind the scenes questions. Read those articles. Learn about those topics. For example, if a government chooses to cap rate in a state, the consumer might look at that and think, oh my gosh, yay, cheaper insurance for everyone. Insurance companies make too much money anyway. And you know what? Maybe part of that is true. Maybe insurance companies do have some fluff they could trim. But the reality of it is, if you dictate to a for-profit company how much they can change the price of their product in this industry, it is regulated by many, many things. And one of those things is what's called the reinsurance industry. And that's probably a bigger topic than we want to get into right now. But my point is that here's the thing. We can't tell the grocery store that you have to sell milk for $1 a gallon because they can't provide the milk for $1 a gallon. And if we make them do that, then they simply have to choose not to provide the milk anymore because they have to make money elsewhere. Now, clearly, there's a lot more that goes into all these decisions, and I'm not trying to simplify the insurance industry down to a gallon of milk, but I am trying to do this. If you cap an industry of how much they can charge on a product and you don't allow them to demonstrate why they need to charge more, these things can end up being a pretty significant problem, in my opinion. And I think some other states have shown us that. Some other states have shown us that by the government placing rules on what carriers can do, that eventually these insurance companies are going to get to the spot where they say, well, then we just can't sell our product in your state. You have less and less opportunity for a person to buy insurance. You have less and less diversity of product. Therefore, those that are willing to stay are going to do everything they can to change that pricing. In California, part of what happened was when the option became available to change more than the cap rate, they were so behind in rate by that point. You're seeing just these terribly dramatic increases in insurance companies just leaving the state because they can't make money. They just can't make money, in their opinion. Like, we can't sit here and debate whether insurance companies make too much or don't make too much or whatever, because you know what? At the end of the day, it's their prerogative to operate in a state or not. And when everybody packs up their bags and leaves, as the consumers and the homeowners and the car owners and all the rest of it that need these products, you can gripe about how much they make and the fact that you think they shouldn't make that much money. However, at the end of the day, they can pack up their bags and leave. And if enough of them do it, what does that mean for the rest of us? For Washington, I'm not saying that we're necessarily to that point, but I'm saying we have to be mindful of how easy it is to slip down that slope. Become involved, learn more, Ask your agent to help you understand more. Ask us. Whatever method you choose, become involved. I think some of the information you'll find out along the way might surprise you, and I think you will become to understand that cheap insurance is a problem. I do believe that insurance companies should have to justify what rate they want to charge. They should have to show why they need that amount of rate or why that product costs that much. I do believe that should be the case, and it has been the case here in Washington. Now, there's been other drama in Washington that has affected the rate in the last few years, and we'll probably do a video about that on another day. But the bottom line is, I don't think that means you open the door for insurance companies to do anything they want in terms of rate, and I don't think it means you shut the door down so that they cannot do what they need to do. If you make it so they cannot do what they need to do, they're going to pack their bags and go. Just thought you might appreciate this behind the scenes look at how some of this works, or at least just my opinion on it. Thanks so much for stopping by.